Financing value add apartment acquisitions and how smart investors maximize returns. So, value add apartment investing continues to be one of the most effective ways to build long term wealth in commercial real estate. So, rather than purchasing a stabilized property at a premium price, experienced investors acquire underperforming apartment communities and improve their operations and renovate units and increase the occupancy and ultimately increase the property value through forced appreciation. The challenge? Well, every successful value add project begins with the right financing strategy. So, whether you're purchasing a 20 unit apartment building or a 300 unit multifamily community, understanding today's lending landscape can dramatically improve your chances of closing that deal and also maximizing your investment returns. So, what is a value add apartment acquisition? And a value add acquisition involves purchasing an apartment property that has unrealized potential. And some common opportunities include buildings with deferred maintenance and below market rents, but also high vacancy and poor management. And there's cosmetic renovation opportunities, and there's operational inefficiencies that you could cure. So rather than buying perfection, investors create value through execution because lenders understand this strategy, and many offer financing specifically designed for value add investors. So let's talk about some financing options that are available. And bridge loans would be the first that come to mind. And bridge financing is often the most popular solution for this problem. And some benefits there include it could be faster closings with interest only payments. It could fund for renovations, and there's flexible underwriting. And there's also short term financing, so 12 to 36 months. And once the renovations are complete, investors typically refinance into long term permanent financing. There's agency multifamily loans, and these are really for stabilized properties after the improvements have been made. And we'll do the takeout through Fannie Mae and Freddie Mac. And some benefits there include lower interest rates with longer amortization. It's a non recourse product with fixed rate financing and higher leverage for qualified borrowers. But there's also bank multifamily loans, and regional and community banks remain competitive for smaller apartment properties with experienced sponsors and local investors, and they offer the opportunity to build a relationship with the bank. And many banks offer competitive pricing when borrowers will maintain significant deposit relationships with the bank. But there's debt funds as well. And debt funds specialize in heavy repositioning and transitional assets and higher leverage and complex transactions. Although pricing is generally higher, these lenders often provide greater flexibility than you're going to find in most places. So, what lenders want to see? Well, the strongest borrowers typically will have or provide experienced sponsorship. So, lenders like experienced operators and those who have successfully completed similar projects is the thought process. But there needs to be a clear business plan, and a detailed renovation strategy should include a renovation budget and a timeline and rent increase assumptions and occupancy projections. But also, what's the exit strategy? And we need to see strong liquidity to support the business plan. The point is, unexpected expenses do happen. And most lenders want borrowers with sufficient post closing liquidity to complete renovations comfortably. So, conservative underwriting and winning deals usually feature realistic assumptions and not overly aggressive projections with rose-colored glasses. So let's talk about some typical improvements that will create value. And many investors focus on renovations that can produce measurable rent growth. So, new flooring, modern kitchens, updated bathrooms, exterior improvements, parking lot repairs, clubhouse renovations, putting in a fitness center or a dog park. But smart home technology and security upgrades are some other ones. And even modest improvements can significantly increase the net operating income or NOI from the property. And because values are driven by income, increasing your net operating income directly increases your property value. And that's called forced appreciation. So, common financing mistakes, and please avoid these costly errors. So, one is underestimating your renovation cost, or overestimating your potential rent increases, or choosing the wrong loan product from the get go, or ignoring your interest reserve requirements, or if there's insufficient working capital to maintain a project like this, or if you're not keeping an eye on your contractors, you've got to manage them. And proper planning will dramatically improve your execution. So, why work with a commercial mortgage broker? Well, many investors make the mistake of approaching only one bank. And simply put, that's going to limit your options. And commercial mortgage brokers like myself can shop your loan to hundreds of lenders, which helps identify financing that matches your property's business plan, your leverage requirements, your timeline, and your exit strategy. And different lenders specialize in different types of multifamily transactions, and comparing multiple financing options will often result in better loan structures, faster approvals, higher leverage, lower costs, and greater flexibility. So, final thoughts for the day. Successful value add apartment investing is about far more than buying the right property. It's about securing financing that will support your investment strategy from the acquisition through the stabilization. And whether you're purchasing your first apartment building or expanding a large multifamily portfolio, working with an experienced capital advisor can help you identify the right lender and structure the loan appropriately, but also position your investment for long-term success. And at CommLoan, the Empower program, we help investors access hundreds of commercial lenders to finance apartment acquisitions nationwide. And if you're evaluating your next multifamily opportunity, we'd be happy to help structure financing that gives your investment the best chance to succeed. That, my friends, is it for the day. Thank you for watching. Please visit my website, billrapp.commloan.com. You can schedule a consultation as well as start a pricing quote, and reach on out. I'd love to have a conversation. Thanks so much for your time.